The stock market has been all over the place as of recently, but with this most recent nasty volatility, there has been some dividend stocks that are now offering a massive high starting yield, which could be an exceptional opportunity for investors that are willing to weather the storm. In this video, we are going to go through 3 separate dividend paying stocks that are offering massive yields and have relatively safe dividends. Now stick around, drop a like down below, and let's get into it. So the first dividend paying stock that's offering a massive starting dividend yield is Arbor Realty Trust, or ticker symbol ABR. And as far as dividend safety goes, it is a 50 on the dividend safety, which means it's technically borderline safe, but the dividend should be intact unless something crazy happens. Now, ABR actually has not had all that horrible of a year as far as trading goes. Year to date, it's actually up 5.02%, which compared to most other REITs is honestly pretty impressive. And this is because ABR was trading much lower a little while back at around $10 per share, now trading in the $14 range. I remember back a while ago, I purchased some shares of ABR in the $12 range, just as sort of more of a higher yield speculative play for my portfolio. And it honestly worked out pretty well because as of right now, I'm up decently on the shares and of course earning that nice juicy dividend. But like I said, ABR is trading right now in the middle range of the 52-week range at around $14 per share. So it's not necessarily something that I would purchase as of right now, but definitely something on my watch list. Now with ABR trading near the middle of the 52-week range, it's at a 12.09% forward starting dividend yield. And what was even kind of shocking to me as a recent shareholder of ABR, the most recent few quarters, they actually had a nice amount of dividend growth. Considering back in March this year, ABR was paying around 40 cents per share per quarter. And then crazy enough, just as of recently, back in August, 43 cents per share per quarter, which I get it isn't the craziest dividend growth in the world, but for a stock like this that in the past has even had a dividend cut, it honestly kind of surprised me and I wasn't mad about it at all. Now, of course, we have to talk about the obvious. ABR has had a dividend cut in the past, which is very unfortunate. Luckily, I was not holding onto this stock back then. I was not even investing into stocks back then. But ever since around 2012, ABR has been paying a dividend once again and has been raising it pretty consistently. So this is definitely a REIT you want to look into or at least have on your watch list. The next stock that's offering a massive high 9.39% starting dividend yield and is a 45 on the dividend safety level is BTI, or British American Tobacco. Now this stock came across my radar as of recently because there was a massive sell-off, which is why the starting dividend yield is so dang high. And I have to be honest, I actually picked up my first few shares of BTI. I grabbed 5 shares just as a starting position at around $29.50 per share. Now for me personally, I'm not the biggest fan of the tobacco companies. Altria and BTI, for example, are stocks that I do hold throughout my portfolios, but they're definitely much smaller positions compared to my other positions and not something that I ever want to make up the majority of my portfolio per se. But looking into BTI's performance, this stock is down 26.39% year to date, so it has been beat up quite a bit, and trading at a brand new fresh 52-week low, now below $30 per share. Now, whenever there's different headlines about regulating tobacco and such, normally BTI and MO don't really trade that well. But looking at BTI in the max time frame, this stock has done pretty well all the way up until about 2018, to where it's pretty much fallen off a cliff and now trading sideways and even down a little bit. Now, I'm not necessarily certain to say that BTI is going to turn around and start trading back well up above $30 per share anytime soon, but at these levels, I definitely think it's worth maybe at least considering a starting position, which is what I did, because the starting dividend yield, which is relatively safe, is around 9.5%. Also important to mention, BTI does have a history of paying dividends consistently over the past 24 or so years. And for those reasons, BTI is definitely on my radar moving forward, and like I said, has officially entered my portfolio. The next stock that should definitely be on your radar if you are a income-focused, dividend growth-focused investor is potentially Verizon, which is offering a 8.67% starting dividend yield and a 70 on the safety score. Now, Verizon is trading at just around $30 per share, which hurts because Verizon is a large position in my portfolio, and my cost basis is around $45 per share, unfortunately. Now, Verizon's chart is honestly pretty horrendous. On the max time frame, Verizon is down minus 49.59%. Now, of course, this does not include dividends, so the total return isn't as bad as that, but year to date, Verizon is down almost 24%. Now, even with all the madness and all the debt that Verizon has, the company still decided to raise their last quarterly dividend payment a few cents, which is definitely helpful, especially because, like I said, I personally am a massive bag holder when it comes to Verizon, but although I've been able to sell covered calls to lower my cost basis quite a bit. Now, Verizon for me personally is definitely not my number one favorite position or most bullish stock across the market, but with how much it's down currently and the starting dividend yield, it's definitely a stock for dividend growth investors to keep on their radar. The next high yielder that's offering a 7.11% forward dividend yield and a 62 on the dividend safety score is Main Street Capital. Now, Main Street Capital is one of my favorite business development companies, and I've made videos about Main in the past, and Main has found a spot in my portfolio over the last 5 or so years. Now, Main's currently trading just under $40 per share, so it's not necessarily on super sale in my opinion, considering the 52-week range is $32.76 and $42.86. But on the max time frame, Main has done very well, up 211+%, and that's not even including the massive dividend that Main offers. And speaking of dividend, like we said earlier, the forward starting dividend yield is around 7.11%, which is not bad at all. Main does pay a dividend on a monthly frequency, which is also helpful for the investors like myself that like to have cash flow on a consistent basis to reinvest into more dividend paying stocks, of course. Main's payout history as far as dividends go have been absolutely perfect for the most part, with tons of special dividends on top of that. Just as of recently, Main paid out another special dividend, which is just a bonus on top of the regular monthly one. Now, out of all the stocks we went through so far in this video, Main Street Capital would probably be my favorite, again, being a more income-focused, dividend-focused investor. And even if you don't necessarily want to buy Main Street Capital at these levels, please keep it on your radar and definitely look into it a little bit further. Now, the last and final dividend-paying stock that's offering a 7.1% forward dividend yield is Simon Property Group, which has a 50 on the safety score as far as dividends go, which is considered borderline. Now, SPG or Simon Property Group is down around 8 or 9% year to date, which might seem pretty bad, but compared to some of the other REITs out there, this is honestly not even all that bad of a performance. On the 52-week range though, Simon Property Group now is trading closer to the low end of it at around $107, 97 being the low and 133 being the high. Now, Simon Property Group has done pretty well historically, as you can see here, up around 408+% on the max time frame. But as far as dividends go, Simon Property Group did actually cut their dividend back in 2020 during all the craziness from around $2.10 to just $1.30, which was a pretty harsh cut for large shareholders of SPG. But to be fair, since then, Simon Property Group has been raising their dividend at a pretty quick rate, getting pretty much almost right back to where they were pre-lockdown. Now, because Simon Property Group's portfolio of malls, a lot of investors are saying that it's not necessarily worth the risk at this current level, but Simon Property Group, if it were to break, say, $100 or $90, I would definitely personally add some shares to my portfolio, and for that reason, Simon Property Group is definitely on my watch list as of right now. Investing in stocks and trying to pick the right ones is already a roller coaster ride as itself, and especially when prices are fluctuating and volatility is as heavy as it's been lately, it's really hard to know which stocks could be offering the potential best opportunities. But one thing is for certain, especially for stocks that are already naturally somewhat high yielders. When volatility comes throughout the market and some of these stocks decrease in share price, it could potentially be an amazing opportunity to lock in a nice cost basis on some really high quality names. And keep in mind, some of these higher yielders could potentially even pay your bills in the future. With that being said, of course, as always, do your own research and your own DD. And of course, I hope that some of the stocks that we went over in this video were helpful for you. So there we have it. Those are 5 different high-yielding dividend stocks, either on sale or potentially very close to being on sale as they trade right now. Now, out of all the different stocks we went through in this video, I want to hear from you guys down below. Which is your absolute favorite dividend-paying stock that's on sale right now? Drop the ticker down below in the comments. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.